Hong Kong market is not just about the Hong Kong economy on a standalone basis. Hong Kong market is actually representative of a very wide variety of sectors in Hong Kong, but also more so in China. So our call on Hong Kong potentially catching up with the A shares is really based on the fact that one, the Chinese economic environment is clearly improving. You mentioned PMIs earlier, and that has been very encouraging so far, and we expect it to continue to show signs of strength as activity resumes post-COVID. Secondly, earnings revisions for China are definitely getting better, probably bottoming soon. And even in Hong Kong, currently right now, it's certainly feeling very, very down. But on a forward-looking 6 to 12 months basis, probably the economic recovery will gradually start to pick up, and the market is indeed forward-looking. And thirdly, because the Hong Kong market is really a lot of China-driven assets, the fact that actually you've had some US dollar weakness is actually starting to help emerging market, Asia, and China-specific performance as well. So on a relative basis, we think that the Hong Kong China markets have reasonably good value and should probably start to catch up with A shares and US markets.
Okay. And on the flip side of that, I mean, when you look at what's happening with A shares, do you see any pockets where you think perhaps valuations have run a bit ahead of themselves?
Yes, I think what we have seen is that there are selective pockets in, for example, certain thematics, areas of tech, semiconductors, areas like biotech, for example. And it's not just A shares. A lot of these growthy sectors have done extremely well in the last 6 months, partly because of the fact that interest rates are at record low levels. So people give a lot of credit to that terminal value and very, very low discount rates. So favoring growth stocks in general. And the other thing is that many of these are considered to be COVID beneficiaries because of the move to online, because of the move to advancement in biotech, and so on and so forth. So from a sentiment perspective, they've had a lot of support as well. So that room for imagination plus the record low interest rates have really propelled certain pockets of the market to very, very lofty valuations. And we actually think that that probably over the medium term will see a bit of correction and risk.